Imagine this scenario. You and your best friend are out in a mall and you happen to see a fantastic pair of jeans on sale. Now, you desperately want to buy it, but you are a few dollars short. So you ask your friend to lend you some money so that you can buy that jeans and you will, pay him back later. Now, this deal is called as friendship. Now, I'm going to, blow this same scenario out of proportion. Now, imagine, let's say you own a company and decide to expand it by opening a new branch. For that, you are, short of capital. Let's assume that. So you want to raise the capital, right? Now, what you do in this case is you collect the money from a group of investors or financial institutions and you promise them to repay the loan after a certain time period, along with interest. Now, this deal is called as debentures. And yes, that's the topic for the day today. In today's video, we'll discuss all about debentures, how it works, its types, pros and cons, and much more. Hi all, my name is Dheeraj Vaidya from wallstreetmojo.com, the home for most authentic place to learn finance and accounting. Let's get started. So first thing first, what is a debenture? A debenture refers to long-term debt instruments that are issued either by the government or the corporations to meet their financial requirements. Say for example, the government may raise funds to construct highway roads for the public. So what do investors get in return? In return, investors or the debenture holders are compensated with an interest income. This interest income is based on specific interest rates, commonly known as the coupon rate, and is usually fixed. Now, since the interest rate is fixed, debenture provides a cushion against market fluctuations, making it a less risky investment. But wait, here is a real catch. The issuers of the debentures, that is the company or the government, raises funds without pledging any physical assets or the so-called collaterals, or kind of sharing the equity with the investors. And because of this, debentures are considered as an unsecured form of bond. To know more about debentures, let's zoom into their features. Firstly, debentures have a very long tenure that lasts up to 10 years and above. Secondly, they have a fixed coupon rate at which the investors receive interest at regular intervals, which can either be monthly, quarterly, half-yearly, or maybe yearly. Another plus point is that some companies issue debentures which can be converted into equity, that is shares, after a specific period of time. Yes, you heard it right. And this allows, investors to get ownership in that company and get the shareholders' benefits as well. Thus, we can say that debentures are flexible debt instruments. And lastly, the repayments can also be made in installments or as a lump sum at the end of the tenure. Since we now understand most of the features of debentures, let's move on to the types of debentures issued in the market. Debentures are classified primarily into 4 types. The first one is based on security, second one based on tenure, the third one is based on the convertibility features, and the fourth one is based on registrations. So let's start with the first category, that is the security-based debenture. Now, based on security, these debentures are classified into secured debentures or unsecured debentures. Simply put, a secured debenture is like buying a house or a car on loan. So let's say if you cannot repay the loan, the bank can obviously seize your assets, sell them to recover their money, right? Similarly, in the case of secured debentures, investors have the claim over companies' assets, which means that these debentures are backed by collaterals, and the loan amount is recovered from the issuing company by selling these assets in the case of bankruptcy. On the other hand, when we talk about unsecured debentures, they are not backed by collaterals. However, in order to attract investors, they do provide a higher interest rate to the debenture holders. Now let's move ahead with the second category, that is the tenure-based debentures. Now, based on the repayment time period, the debentures can be classified into redeemable debentures or irredeemable debentures. So in the first type, that is the redeemable debentures, the amount has to be repaid by the company within a certain time period. However, in the second type, that is the irredeemable debentures, there's no redemption date at all. Here the company continues to issue the interest amount until it becomes insolvent. So the third type is based on convertibility factor. Here the debentures are further classified into convertible or non-convertible debentures. As the name suggests, convertible debentures can be transformed, that is converted into equity shares after a particular time period. On the other hand, when we talk about non-convertible debentures, they do not convert into equity shares. It's as simple as this. Now, coming to the fourth category, that is the registration. Here are two types, registered and the bearer debentures. The first category, registration-based debentures, are registered under a specific name in the company. And if the investor has to transfer the ownership, they need to inform the organization. On the other hand, if you have this bearer debentures, it is not registered with the company and can be easily transferred. Now, you may be thinking, why go for debentures? Why not directly take loan from bank? Isn't bank loan an easy option? The companies opt for debentures rather than bank loan because the banks impose many restrictions on how the money has to be used. So, if the company has a current loan, the bank may not even provide additional loan. Therefore, debentures become a much more convenient way for a company to raise funds, and this is the primary benefit of issuing debentures. Trust me when I say this, that debentures have various advantages not only for the company but also for the investors. So let's take a look at the benefits. First and foremost, debentures are beneficial for the issuing company as they don't risk their assets. Also, the company's ownership is not diluted, unlike the case of shares. And in addition, interest payments is tax deductible, and therefore it saves the overall tax amount for the issuing company. As for the investors, these debt instruments contain low risk and provide regular returns. Moreover, in situations like corporate dissolutions or bankruptcy, debenture holders are repaid before the common shareholders. However, debentures also come with their own share of drawbacks. Come on, not everything is entirely beneficial, right? So let's first discuss the limitations from an investor point of view. The first limitation is that most debenture holders have zero control over the decisions of the company, as they are not the shareholders. Also, they do not have any voting rights too. Again, the investors cannot expect any share in the company's profit. The investor's role is just to invest the money and get the interest and the principal amount back. Nothing more than this. Now, let us look at the drawbacks from the company's point of view. The most crucial point is that after the debentures are issued, the company is required to pay the interest and the principal amount even if there are no profits. Again, if there is a single default payment, it can drastically affect the creditworthiness of the company. Now, most of you may be thinking that debentures and bonds are somewhat similar, right? Okay, let's clarify that. What you say is partially true, but there's one significant difference. The bonds are backed by collaterals and are much more secure than the debentures. And in the case of liquidation, companies will pay bondholders before the debenture holders. Since now you know the ins and outs of debentures, let's see the factors that must be considered before investing in it. The first and the most important factor is the company's creditworthiness. You can check it from the ratings provided by credit rating agencies like the Fitch, S&P and Moody's. The next aspect is to make yourself fully aware of the charges and the rate of interest offered by the company. So basically compare all these aspects before making a decision. Irrespective of whether you decide to invest, make sure to have a complete knowledge about it. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future videos, then you may do so by writing about it in the comments section. Also, we come up with interesting videos on finance and accounting topics regularly. So if you have not subscribed to our channel yet, then please do so by clicking on the subscribe button below so that you can get the notification as soon as we release a new video. Thank you for watching. Have a nice day.